Hello, America. Good to see you once again. We're here thinking about the market stretch as we check out our weekly yoga of investment. So today we're going to be talking a little bit about what we always talk about, which is the three major indexes. The first of the major indexes that we're going to look at today is the Dow Jones Industrial Average. That started about 140 years ago, around 1887. The next one we're going to look at is the S&P 500, which is about half the age of the Dow Jones. That started out in 1957, I believe. And then we'll look at the Nasdaq 100, which started out in about 1984. So today we're just going to check in with the Dow. We're going to take a look at the 1 day, the 1 month, the 6 months, and the 1 year figures. Well, today the Dow is up, striking an index price of $50,579.70, up 0.58%. So that means if you had $100 in the Dow, you would be up 58 cents if you were tracking the index today. On the 5-day, up an amazing 2.22%. If you had $100 in the index, you'd be up to $2.22. So that means, think about it, if it did that every week for 50 weeks, you'd be up about 110%. However, the index doesn't always act that way. There will be some times when the index is up, other times when the index is down, and other times where it might be relatively flat. Recently, we've been on a 17-year bull market. Let's check out how the 1 month has gone. For 1 month, the index is up 2.2%. That means about a month ago, it was a little bit higher than it was 5 days ago. So it's been a little bit up and down. That makes up for that difference, 0.02%. Or if you had $100 in the market, you think about it as a 2-cent difference. The 6 months up an amazing 0.89%. A lot of people are looking for that 8% a year. So if you've been in the market and you're expecting 8% a year, you might be relatively happy to have gotten almost 9% over 6 months. For the 1 year in the Dow, drum roll please, an amazing 20.83%. That's about 2.5 years of earnings that you would normally expect in a 1 year if you were taking the traditional advice that you might expect about 8% a year. So a very good year for the Dow Jones, which is 30 of America's oldest stocks, often referred to as blue chip stocks. All right, next one we're going to look at is the S&P 500. For the 1 day, up 0.37%. For the 5 day, up 0.79%. In the 6 month, up 11.46%, almost a year and a half's worth of growth. And then for the 1 year, it is up an amazing 27.93%, 28%. At 8% a year, that's about 3.5 years worth of growth. Put that in perspective, if you had $100 in the market, you would have made close to 28 in the last 1 year. Well, what if you had $1 million, as Dr. Evil likes to obsess about, in the market? After 1 year, you would be up almost $28,000. Let's go ahead and take a look at the next index. So the Nasdaq 100 on the 1 day is up 0.42%. As you might recall, the Nasdaq 100 follows the top 100 stocks in the Nasdaq, but only the non-financial stocks. So you might want to remember this has a little bit more of a tech flavor as we pull back from finance, and that vacuum typically lends a little bit more to some more tech stocks in there. So you can think of the Nasdaq 100 as being a little bit more tech heavy than the S&P 500. The 5 day up 0.81% would have made 81 cents if you had $100 in there. So go out and spend that all in one place. And 1 month, an amazing 9.45%. You would have multiplied your money by about 10%. Imagine if you had $100,000 in the index, you would have made almost $10,000 in the last 1 month. All right, not a bad way to make money if you can swing and get the investment principle in there. Over the last 6 months, we've got about 18.52%, an amazing 2.5 years worth of growth. If your market goal or indicator is 8% a year, that is fantastic. And then over the 1 year, we've got an incredible 39.64% investment improvement, almost 5 years of investment growth. That's incredible. at 8%, if that's the way you like to think about it. Okay, what's been driving the markets? Markets ups and downs. Well, interestingly enough, compared to we've had so much kind of like down news, some of the stories that were keyed in by my editor this week were also a little bit down. So let's see what he suggests we look at, but interesting stories nonetheless. Walmart stock has exceeded the forecast for revenues, coming in at about $178 billion this quarter, beating the analysis consensus that they come out at around $175 billion. So it's about a 7.3% increase over last year. But Walmart stock itself has had a little bit of a downturn. Walmart stocks drops on guidance despite beating revenue estimates. All right, so they're down about 7% as of Thursday. Let's take a look at gold prices. Have been all over the place, and of course they've been pretty incredible. You might have heard about that. And over the last 1 year, they've gone from way back around May 6th of last year at $3,433, or maybe a little bit later in May of $3,246, to a high around late January of $5,300. And then we've had some roller coaster between now and then. And now it has gone back down to $45.25. So gold has had a pretty healthy increase, about 50% over the last year. But if you bought at the height of the revelry in January, you might have lost a little bit of money since then. Seems like it's been a little bit on the decline recently, but still up 50% over a year. That's an amazing story. All right, the biggest story, perhaps the biggest one that I've been watching, seems to be the US, Iran, and the oil prices, it says, have fallen below $100 per barrel after Trump says Iran talks in its final stages. So apparently the economic people, the stock market, things like that are usually kind of following, it looks like, what Trump says, and we do see the prices kind of follow based on what he announces. So it was considered to be almost like an oil apocalypse at one point. Iran and the rest of the naysayers were saying we might see oil go up to over $200 a barrel, but realistically it seems like it's been at $100 or less per barrel. Still a big impact on the market, but overall the optimism in the market is that things will go well and this conflict will come to an end soon. Well, thanks for joining me today for another market roundup, the weekly market stretch, and spending a little time checking out the indexes, not losing track of them, checking in about once a week, but also not obsessing over it to where we're emotional basket case every day watching our investments go up and down. Well, Max Drew, CPA, looking forward to catching you in the next one. Thanks for joining me today. Take care and have a great rest of your week.
Follow, message us, or scan the QR code on the screen to learn more.